Some clients want more information about the current economy, so this is for them. Leading economic indicators remain positive. The times where the indicators have declined less than zero have indicated problems. The red areas are recession periods. We're not close to zero currently. Manufacturing and services data also do not paint a recessionary picture currently. Industrial production remains robust, if only we can avoid getting into the red recession zones. I do have concerns about the housing sector, though. Notice how sentiment seems to be tapering off along with CEO confidence. It would have to get to -1 for me to get overly cautious, though. This is something we will be watching. Wages continue to increase for most Americans, which is very good for the economy. If President Trump can continue to keep unskilled labor from pouring into America, lower wage earners could expect further increases in wages as demand increases. Emerging markets even look favorable as the trend lines seem to be crossing. Crude oil seems to have stabilized, going back to the levels established in 2016 and 2017. I would like to see the picture increase, as it would mean more money for America, as our country is the largest oil producer now. Gold seems to be in a holding pattern, which could easily move into an accumulation phase. However, I would not want to be too early, as gold investments don't pay dividends. Bitcoin, on the other hand, continues to decline. I would continue to advise against getting into this. Here is an interesting chart that shows commodity prices versus recessions. Notice that in the recessions that have occurred going back to the 1970s, there have usually been pronounced drops in commodity prices. Recently, we have seen a precipitous drop. The question is, will this decline continue? As I said earlier, I would like to see commodity oil prices increase because that will mean a recession is less likely. So let's see if this trend line can hold. Now let's talk about interest rates. In 2016, the 10-year Treasury slipped to its lowest yield in years. Then the rates have been increasing. However, recently they have declined below the uptick line for rising rates. This suggests interest rates could move sideways in the near term, which would be good for folks in bonds. The same is true about the 30-year Treasury chart. A sideways near-term movement could be expected. Who owns the national debt? The largest are U.S. investors, who own 32.5%. Next are the foreigners at 29.3%. Notice which countries hold the most: China and Japan. That alone suggests that both countries want favorable trade policies with the U.S. A deal with China will occur in 2019. What about corporate bonds? In the last quarter, there were more downgrades from A to BBB, which is disturbing. This is because lower ratings mean lower corporate bond prices for investors. Investors in corporate bond funds should reevaluate their risk. The other question I get sometimes concerns President Trump. Some clients tell me they worry he's going to wreck the economy, cause a war, or sell out to the Russians. I admit that the president tweets far too much for my taste, but tweets aside, I have confidence in what seems to be his strategic plan. He wants a strong U.S. economy and has implemented policies that have bolstered it and the market. Examples include eased regulations, tax breaks, and renegotiated treaties to be more beneficial to the United States. In fact, one client sent me this humorous slide to me. Political gridlock will continue in Washington, but as the old adage goes, what does that have to do with the price of tea in China? The U.S. economy is on its own destiny course. Investing in the right companies and asset classes ought to trump most political intrigues. As for war, the president has implemented policies to reduce that. The U.S. is getting out of Syria and has negotiated a deal with North Korea, which had been threatening to attack us. I think we're safer now than when he came into office. As for selling out to Russia, I leave that to the ongoing Mueller investigation. Lastly, I'm asked if the president will be impeached. I'm not a political strategist, but you do the numbers. A two-thirds majority is required for impeachment. The Democrats consist of 54%. Could they get the 67%? It depends upon how many Republicans agreed. Even if the House Democrats succeeded in getting the impeachment votes, the trial would be conducted by the Senate. And who controls the Senate? The Republicans do. In my unqualified position, I think impeachment is all talk, nothing more. So please don't lose any sleep over this and your portfolio. That sums it up. If you have personal concerns, give us a call at Armada Advisors, where we are charting a better course.